Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news the world's economy is shutting down. The US is still getting explosive increases in its coronavirus infections and deaths, becoming the world's epicenter for the disease. State shutdowns are spreading in the absence of any federal leadership to deal with the crisis except on the financial level. As a consequence, consumer confidence is diving, almost its steepest decline ever. Not only is it likely to get worse, it is likely to get very much worse as people realise the policy failures have been toxic. It could get ugly for civil society there. New emergency measures are on the table for helping state and local governments from going broke. And across the now closed border, Canada cut its official interest rate by 50 basis points overnight to 0.25%. But that was just part of a coordinated response that included a 75% wage subsidy for affected workers. India has also cut its official interest rate by 75 basis points to 4.4% and unleashed $30 billion of stimulus. In the UK, senior members of their government, including their Prime Minister, have tested positive for COVID-19. And the UK has suffered a credit rating downgrade. China has effectively closed its borders to travellers who are not citizens, worried about undoing their hard-won and painful COVID-19 containment gains. Their recovery rate is now up to 91%, but it has cost them 3,300 deaths so far. But China is increasingly optimistic it can restart its economy, and a number of innovative helicopter measures are being deployed. New Zealand's immediate economic future probably depends on these being a widespread success. And company profits fell by a third in the first 2 months of 2020 in China. That's according to official data. In Australia, confused signals continue, and there's still no nationwide lockdown. But they have just announced a two-person rule. No groups larger than that, and that may effectively be a lockdown. US Treasury 10-year yield is soft again today at under 0.68%, down another 5 basis points. Worldwide, companies with investment-grade ratings are racing to raise more cash ahead of expected cash flow strains. Companies without investment-grade credit ratings will be paying steep premiums if they can raise any market debt. And gold is down $10 today to $1,628 an ounce. US oil prices are staying low, however, down to $21.50 a barrel, and the Brent benchmark is also low at just under $25 a barrel. The world is drowning in crude oil nobody needs anymore. And the Kiwi dollar is starting today marginally firmer again than this time Saturday, now at 60.4 US cents. That's a remarkable 4% rise in a week as the greenback takes a hammering. On the cross rates, we're still high at 98 Australian cents, and against the euro, we're at 54.2 euro cents. That's a 2-cent rise in a week. That means our trade-weighted index is up to 66.6 and its highest in 10 days. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.